Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we've got a brand new penny stock we've never talked about on the channel. The company name is Skylight Health. The company actually came to me in the form of a subscriber request. So if you guys want to see any small cap companies or penny stocks covered on the channel, feel free to drop a comment in the section below. Let me know the ticker and I'll do my best to get a video out for you with a deep dive analysis and my personal opinion on the stock. Now before we get into today's video, please take a second, hit the like button, you guys. It's a huge help to myself and the channel. Feel free to leave a comment in the section below. Let me know what you think of Skylight Health. I personally reply to each and every comment, so if you want to get in contact with me, this is a great way to do so. And if you're not already subscribed to the channel, McNallie Money, feel free to do so. Now with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we're going to be taking a deeper look at Skylight Health Group. Now this company came to me in the form of a subscriber request, so shout out to Alex Watson who commented on one of my videos and asked me to take a look at SLHG on the venture here. You can see they closed out on January 26 at $1.05 Canadian, and this is a company that's pulled back significantly over the last year. If you go back to February 15th of 2021, this company was trading in excess of $9 Canadian. So in terms of a buying opportunity here, you guys, this may be a great opportunity to get in at this company at the ground floor and for a much cheaper price than you could have even a couple of months ago. And if we go back even to the middle of October of last year, again, you can see Skylight Health was trading above $4 Canadian. Now, in terms of what the company actually does, they operate in the healthcare services space. They're a technology company primarily based in the United States. They also have some exposure in Canada and United Kingdom. And the company's main focus is really on improving the primary care system here in North America. Now, the company's got about 39 million shares outstanding. So based on today's price, you're looking at a market cap on this one of about $41 million, which definitely does make this a penny stock in every sense of the word. We've talked about a lot of these modern healthcare type of companies or telemed type of companies on the channel previously. And I think this one's definitely interesting because it really is focused on that primary care or the physical practice network, which in my personal opinion is ripe for the picking here. And as you're going to see in today's presentation, there's a lot of change really coming in this industry. And I think Skylight Health Group is really pioneering a lot of that change. Now, before we get into the investor presentation, I wanted to give you guys a quick look at their financial results. So this is from Q3. It came out the middle of November, so we're expecting year-end results pretty soon here, you guys. Revenue growth was up 270% year over year, so very high growth company, and 16% growth compared to Q2 of 2021, so quarter over quarter. And in terms of actual dollar volume, you're looking at about $12.2 million for Q3 compared to $3.3 million in Q3 of 2020. Now this company, very similar to some of the other telemed plays we've covered on the channel, like CloudMD for example, is very focused on merger acquisition type of activity. So you're going to see there's really two main sources of growth here. Organic growth within the company, which was up 8% quarter over quarter. And then they've also got an influx of new revenue based on merger acquisition activity over the last few quarters. And that's what you'll see on this bullet point here, where they entered the Pennsylvania market through the acquisition of Aspire Health Concepts, which added over 2,000 Medicare lives to the Skylight Health Group's existing portfolio of patients. Now, two other things I wanted to point out here, you guys. They did put up a loss, so net loss from operations was just under $4 million for the quarter, and they currently have a cash balance of about $5.6 million. So over 10% of the market cap for Skylight Health Group is actually sitting in cash, which is great to see as a small cap or micro cap company. Now, if we jump over to the Skylight Health website, you can see the company is really focused on changing the way the healthcare system currently works. We believe in empowering primary care to deliver a higher quality of service and focus solely on improving the lives of their patients every single day. So primary care is really your traditional doctor's office, and this is really the gatekeeper or entry point into the greater healthcare or medical system. So Skylight Health feels this is a crucial component of the overall model, and as mentioned, they really are overdue for some changes in this specific field. Now, if we jump to the investor page, you can see they do trade on the NASDAQ as well in the US under the ticker symbol SLHG. Same ticker here in Canada on the TSX Venture, so that's the chart we had pulled up in the intro. If you look into the corporate overview here, you guys, you can see Skylight Health Group is a healthcare services and technology company working to positively impact patient health outcomes. The company operates as a U.S. multi-state primary care health network comprised of physical practices, providing a range of services from primary care, subspecialty care, allied health, and laboratory/diagnostic testing. So they really do have a diversified operation here, again, primarily focused in the U.S. on the primary healthcare system. The company is focused on helping small and independent practices, which surprisingly to me make up a large percentage of the overall base of healthcare operations, from a traditional fee-for-service, so FFS, system or model, and you're going to see that acronym later in the investor presentation, to what's called a value-based care model, so a VBC model, through tools including proprietary technology, data analytics, and infrastructure. Now in this FFS or traditional model, payers, so whether that's commercial or government insurers, actually reimburse on an encounter-based approach. This puts a focus on the volume of patients per day because clinics and doctors are paid on the number of people they actually can push through their clinic each and every day. In a VBC model or value-based care model, payers reimburse typically on a capitation basis. So this means they get a fixed fee per member per month. Now this is really going to shift the emphasis on quality over volume. So VBC will lead to improved patient outcomes, reduced cost of delivery, and drive stronger financial performance from existing practices. So really trying to shift the healthcare system from a volume model to a quality model. So now that we have a basic understanding of what the company is about, we've taken a look at the share price, I wanted to shift gears, jump into the Skylight Health investor presentation, and really start to look at some of the business fundamentals behind this company. So as mentioned, they're a rapidly growing national primary healthcare platform through both organic growth and acquisition activity, which we're going to look at on the next slide. And in terms of some of the key company metrics, they've achieved 8 acquisitions in the last 12 months, so very heavily focused on merger acquisition activity. They currently serve 6 key markets in the United States through a network of 24 medical centers. They touch 99,000 or just about 100,000 primary care lives. They've got 83 medical professionals within their organization, and that equates to approximately 13,000 Medicare equivalent lives. Now, as I just mentioned on the prior slide, Skylight Health Group is really focused on 2 fundamental models of growth. So growth by acquisition, which we just talked about, 8 acquisitions in the last 12 months, which is phenomenal. They're focused on acquiring small, independent primary care practices, so PCP, primary care practice, in new and existing markets. They're looking to buy businesses off motivated sellers in this highly fragmented market. So over 40% of PCPs or primary care practices are actually independently run. And that was quite surprising to me as an outsider looking into this company. They're looking for businesses that are delivering strong quarter-over-quarter growth with established revenue, EBITDA, and patient base that they can then fold in to the greater portfolio or organization. And in terms of valuation, they're looking for businesses that are priced between 3 to 7 times EBITDA. So if you think about it, that's kind of their framework or matrix when they're looking at potential acquisition targets. Now on the other side of the spectrum is the more organic-based growth. So once they've actually got these clinics under their portfolio, they're really focused on converting them from that FFS or fee-for-service system to a value-based care model or VBC model. And what that actually allows Skylight to do is recognize reimbursements from payers, so whether that's insurance companies or commercial payers. And the goal within this organization is to have over 100,000 VBC patients within the next 3 to 5 years. And in terms of what they're currently receiving in terms of reimbursements per patient per year, they're in the range of about $200 to $400. So on a high level here, you guys, Skylight Health Group goes out, they find primary care practices, they purchase these practices, fold them into their greater organization, then they really try and update these practices from a fee-for-service to a value-based care model, and they receive a kickback based on the individual patients that these clinics see from existing payers within the healthcare model. So whether that's commercial payers, so company-sponsored medical plans, or actual government insurers or insurance companies. Now, in terms of the market opportunity here, you can see primary care is a fast-growing focus for payers and government alike. Primary care market represents over $290 billion, or approximately 20 to 25% of the total healthcare spend today. So as you can see, you guys, this is a major component of the overall healthcare model, and it really hasn't changed fundamentally in decades. Primary care directly influences more than $2 trillion of downstream healthcare spend. So the initial visits that are addressed in primary care practices, they actually lead to further healthcare costs down the road. And these increasing downstream costs in healthcare are actually driving further focus and capital investment to the primary care market. Now, as I mentioned in the intro, primary care functions as the gatekeeper to the overall healthcare service system. And in the opinion of Skylight Health, primary care practices need to really change as the market transitions from this fee-for-service to value-based care model. And the reason for that impending change is really laid out on this slide here. So as you can see, the future of primary care is at risk. FFS providers or fee-for-service providers face a number of roadblocks, and that's really forcing them into consolidation. So some of those roadblocks are increased administration costs, shrinking fee-for-service rates, increased network competition and the emergence of telehealth type of offerings, lack of new physician owners, and the actual operational challenges of shifting to a value-based model can be costly and time-consuming if clinics are actually trying to undergo this transition independently. And this slide here really talks about some of the changes we're seeing in the US healthcare landscape as it relates to payers really driving change in the various different models we're seeing, ranging from traditional FFS, so fee-for-service, pay-for-performance is another type of plan or model, shared savings and bundles, and then the value-based care or VBC model that Skylight Health Group is really trying to pioneer. And as you can see in this chart here, you guys, the VBC model currently on average represents only about 5% of the overall market. So again, it's ripe for the picking here. And as payers and clinics alike start to see the benefits of this model compared to some of these more legacy or traditional styles of operation, I think the industry overall is going to want to continue to adapt and push towards this value-based care model. Now this slide here is interesting because it starts to talk about some annualized revenue run rates. So based on the acquisitions made by Skylight Health Group to date, they've got annualized revenue contribution of approximately $35 million. So almost equivalent to the company's market cap here, you guys. They've got a total patient base of approximately 100,000 patients, with 10% of those actually within the Medicare system. And annual revenue contribution of the Medicare patients alone is expected to be around $5 million per year. Now looking forward, so 3 to 5 years out, they expect their current Medicare patient base to generate over $200 million per year. And as you can see on the right here, we expect growth over 100,000 eligible patient lives in the next 3 to 5 years. Skylight expects to generate annualized future revenues in excess of $1 billion. Now, obviously, a lot can happen in the next 3 to 5 years here, you guys. These are very big numbers that the company is putting forward, but it will be interesting to see, based on the current share price and market cap, if the management team is able to continue to execute, fold in additional clinics and businesses, and really start to achieve some momentum towards these ambitious goals. And speaking of ambitious goals, I wanted to include this financial snapshot slide, specifically the research coverage and price targets here on the top right. So you can see a number of firms are actually covering this company, and they've all put out price targets that are extremely bullish based on the current share price. So you can see on the low end here, you guys, Research Capital has put a price target of $4.80 Canadian. On the high end of things, Northland Capital has a price target of $9 US. And then there's a number of other firms kind of in the middle there in the $7 to $8 range. So based on the current share price and these analyst price targets, you're looking at an expected return in the range of 4 to 8x from current share price values. Now again, these are extremely ambitious numbers here, you guys. I'm not necessarily saying that Skylight Health Group can hit these type of price targets, but it is encouraging to see that there's a number of analysts covering this company, and they've all got price targets that are well above the current share price. And if you actually look at the bottom right here, you can see the ownership summary. So institutions only represent about 2% of this company. Insiders own about 11%. Private equity or VC firms, venture capital firms, make up about 13%. And currently about 3/4 of all shares are actually held by public or retail traders. And that's a perfect segue to this slide here, which really compares Skylight Health to some of the larger, more established players in this space. So you can see here Oak Street Health trades under the ticker symbol OSH on the New York Stock Exchange. Cano Health trades under the ticker symbol CANO or CANO. Both of these companies have much higher market caps, so you can see Oak Street coming in at about $14 billion and Cano Health landing just under $7 billion. But the number that really caught my attention on here, you guys, is the number of owned medical centers. So although the market cap on Oak Street and Cano is exponentially larger than Skylight Health, you can see they actually, in terms of clinics, only own about 3 times the actual properties that Skylight Health does. And in terms of their patient count, Skylight Health is right in the mix here at that 100,000 level compared to Oak Street at 97,000 and Cano at 122,000. Now there is definitely something to be said about scale, especially in the healthcare system or industry, but when you start to see the market caps and enterprise values that some of these competitors are really trading at, and you think they're 200, 300, 400 times what the market cap of Skylight Health currently is, and you start to look at the actual number of medical centers and the patient count among these various different businesses, the investment thesis really does start to look quite attractive for Skylight Health if you're looking for exposure to the medical industry and you want to get in at the ground level on one of these up and coming organizations. So to close things out here, you guys, I wanted to give a quick summary of some of the investment highlights in Skylight Health Group. Now for full disclosure, I currently do not hold any shares in this company, and I do not have any plans of purchasing shares in the immediate future, but this is definitely one that's on my watch list. And as you guys know, or people who've watched this channel should be aware, I definitely like the healthcare sector. I think it really does need an overhaul or a facelift. And I think based on the aging population in the US and Canada alike, the healthcare sector is really going to see a lot of investor attention over the next few decades. So in terms of the investment highlights for Skylight Health Group here, you guys, they've got strong growth both from their organic base and through acquisitions in the United States. They completed 8 acquisitions in the last 12 months, which combined contribute to more than $35 million in annualized revenue, which we talked about in today's presentation. They've got a strong history of accretive acquisitions at attractive prices or multiples in the range of 3 to 7 times EBITDA. Their 2021 guidance is $41 million, and they've got a robust pipeline of future acquisition targets. An experienced leadership team that's really focused on that primary care market and the value-based care model. A very attractive valuation, so according to this presentation, 3 times enterprise value to expected 2021 revenue, which has actually come down quite considerably based on the share price drop that we've seen in recent months compared to the average or peers in the industry, which are trading at approximately 10 times enterprise value to expected 2021 revenue. And the final point here, you guys, you know I love to talk about TAM or total addressable market. Huge opportunity here, and in my opinion this market is really going to see substantial growth based on that aging population. So currently estimated at about $3 trillion in terms of the US healthcare industry overall, with ripe opportunity for disruption and consolidation. So for those reasons, you guys, I definitely think Skylight Health Group is worth a look. Again, thanks for the recommendation on this one. If you have any other companies you'd like to see reviewed on the channel, please drop a note in the comment section below. Let me know what you think of Skylight Health Group, if you're currently holding shares, and how you think they stack up to some of the other players in this space that we've talked about on the channel, like CloudMD, for example. If you're not already subscribed, McNallie Money, feel free to do so. And if you're still watching at this point, make sure you hit the like button before you leave, you guys. It's a huge help to both myself and the channel. That's all for now. Have a great rest of your day, and thanks so much for watching.